Good morning. It is Thursday, January 8th, 2026. If you thought fundamental analysis was dead, you were wrong. But today, the most important fundamental isn't P/E ratio or cash flow. It is the president's social media feed. Yesterday, billions of dollars in market cap evaporated in seconds because of two posts. Defense contractors? Crushed. Single-family housing REITs? Decimated. Why? Because the White House just threatened to freeze dividends and ban institutional home buying. This is stroke-of-the-pen risk. It is the single biggest variable in your portfolio right now. But look at the other side of the screen. While the politicians are creating chaos, the engineers are building the future. Intel, yes, that Intel, is finally shipping its next-gen chips. Mobileye is buying robots. So here is the conflict for today. The executive order versus the execution. One part of the market is being repriced by political whims. The other is being repriced by technological breakthroughs. Do you buy the panic, or do you chase the innovation? This is the pre-market pulse. Let's dismantle the noise. Deep Dive 1. The Dividend Police, Defense, and Housing. Let's start with the lead story because the government just walked into the boardroom. First, the defense sector. For decades, buying Lockheed Martin, LMT, or Raytheon, RTX, was the easiest trade in the world. War happens, you get paid, they buy back stock. Simple. Yesterday, that broke. President Trump explicitly threatened to block defense contractors from paying dividends or buying back stock unless they increase production and invest in new plants. He is demanding a cap on executive pay and a freeze on shareholder returns. If you own these stock for the yield, you are in the danger zone. The market hates uncertainty, and will I get my dividend is the ultimate uncertainty. That is why LMT and GD are sliding. But he didn't stop there. He turned his sights on housing. In a move that sent shockwaves through private equity, Trump said he will take steps to ban large institutional investors from buying single-family homes. Look at Invitation Homes, INVH, and Blackstone BX. They tanked immediately. The narrative is affordability for Americans, but the market reality is a liquidity crunch. If private equity can't buy homes, who sets the floor in the housing market? Citi says the sell-off is overdone and claims a forced liquidation would actually unlock value. But do you want to bet against an executive order? The takeaway, the rent-seeking trade is dead for now. If your portfolio relies on government contracts or hoarding housing supply, you are in the crosshairs. Rotate out of the targets and into the innovators. Deep Dive 2. The chip war fog, NVIDIA versus Intel. Now, let's pivot to where the growth is and where the confusion is. Semiconductors. We have a massive game of he said, she said, playing out between Washington, Beijing, and Santa Clara. The China pause. Reports hit the wire that China has instructed its tech giants, ByteDance, Alibaba, to halt orders of NVIDIA's H200 chips. Why? Beijing wants to see if the U.S. will actually allow the exports before companies waste cash stockpiling them. It's a standoff. NVIDIA says demand is fine, but the order book in China is currently frozen in regulatory purgatory. But while NVIDIA deals with geopolitics, the Patriot Trade is finally working. Intel, INTC, is jumping. Why? They just confirmed they have successfully shipped their first chips built on the 18A process, the Panther Lake chips. This is the moment Intel bulls have been waiting for. 18A is the technology that is supposed to catch them up to TSMC. Melius Research just upgraded Intel to a buy with a 50 target, calling it the business partner of the Trump administration. While NVIDIA fights trade wars, Intel is building the factories Trump wants. The macro layer, and don't overlook India. We have sources saying India is considering scrapping import taxes on U.S. LNG to appease Trump and lower their trade surplus. This is the new world order. Nations are scrambling to buy American energy and American chips to avoid tariffs. If you are trading macro, long U.S. energy, XLE, and domestic semis, INTC, is the hedge against the trade war. The silent mover, the robotics pivot, and BLY. While everyone is panicking about tariffs, a massive shift in AI just happened, and nobody is talking about the implications. Mobileye, MBLY, is up big. They aren't just a self-driving car company anymore. They just announced a $900 million acquisition of Minty Robotics. They are taking their IQ computer vision tech, which cars use to see pedestrians, and putting it into humanoid robots. Analysts at Morgan Stanley say this expands their market beyond the cyclical auto industry. Why this matters? We are seeing the convergence of physical AI. Tesla, TSLA, has Optimus. Mobileye, MBLY, now has Minty. NVIDIA, has the Project GR00T platform. The silent move here is that AI is getting legs. Literally, the smart money is betting that 2026 isn't just about chatbots. It's about robots that can work in the factories that Trump is forcing companies to build. Also, keep an eye on Eli Lilly, LLY. They are in advanced talks to buy Ventyx Biosciences VTYX for $1 billion. The M&A market is waking up. Cash is being deployed before the rules change. Let's translate the headlines into trades. 3 tickers. Rapid fire. LMT, Lockheed Martin, verdict, bearish. Why? The buyback ban threat is real. Even if it's just negotiation, it caps the upside. Investors' own defense for the steady cash return. If Trump shuts off the dividend spigot to force CapEx spending, the stock is dead money. Avoid. Intel, verdict, bullish. Why? Execution. They finally shipped 18A. Plus, they're the political winners in an America First supply chain. Melius upgraded them to 50. The turnaround is actually happening. VTYX, Ventyx Biosciences, verdict, hold/take profits. Why? The stock popped 37% on the rumor that Eli Lilly is buying them for 14/share. If you own it, congratulations. Sell into the strength. Do not chase it here. The easy money has been made. Here is your playbook for the next 24 hours. Watch the REITs. If INVH or AMH stabilize, it might be a buying opportunity, but wait for the executive order text. Don't catch the falling knife yet. The China chip check. Watch NVIDIA at the open. If the China pause is confirmed as a hard ban, we retest support. If it's just noise, we rally. The M&A wave. Watch Cintas, CDS. They are aggressively chasing UniFirst. Industrial M&A is heating up. The president has the pen, but the market has the price. Trade what you see. These the pre-market pulse. We scrape the noise, you trade the signal. If you like our content, just hit that subscribe button to ensure you get our latest update.